All right, welcome back. We're going to hit to another important topic. Hold on. All right, welcome back. So we previously talked about the dead clock. We talked about the market cap. We talked about the BEC and their system, and we were talking about United States dollar coin. So because we talked about it, we've got to show it. Just so you all can see that I took the time to show all these things to you. Share this with your family, your loved ones, so they all know what's coming. This is not new. I have a whole host of videos from way back where I talk about this stuff, but clearly this is refreshed and updated, so we're going to dig back in. So we're at USDC.com. This is the world's digital dollar. All right. Get you some. Get you some. There's use cases, right? You can learn about it. So we're going to go to this site. There's so much you can do with United States dollar coin. Bring your cash on chain with trusted digital dollars that hold steady value and are accessible to nearly anyone with an internet connection. Look at that. You can transfer money across the world almost instantly, anywhere. You can make secure real time payments online and in person. See that? Point of sales machines. You can protect your savings and preserve your wealth. Okay. Just doing this stuff online, moving digital money. You can trade, which is mitigating volatility and execute trades on the top exchanges. Look at that. Binance US, of course, Coinbase, Crypto.com, Kraken, OKEx, and more to see. In circulation right now, there's $60 billion, right? You can unlock trading with the world's largest regulated digital dollar. This was established in 2018, backed by one-to-one with U.S. dollars in cash and cash equivalents, which are just stocks, bonds, so on and so forth. It is used in 100 plus countries. Okay, it's available worldwide. Access USDC on major exchanges in 100 countries around the world. It's on 19 chains. It's on the Algorand chain, the Aptos chain, Arbitrum, Avalanche, Base, CeeLo, Ethereum, Hedera, Linea, Near, Noble, Hop, Mainnet, Polkadot, Polygon, Solana, Stellar. It's not on XRP though. Sui, Unichain, and ZK Sync. Not that XRP needs it. Ripple is for corporations and institutions, more or less institutions and countries. So this isn't necessary for them. They use RLUSD, which is basically institutions and corporations doing business. It's above us. It's really not for us. Stuff for us is Stellar, Solana. Well, these here. And you can see what is, let's see if we can find, let's see what US. Solana US, Stellar US. Okay. Avalanche. I think we saw Avalanche. Let's go back over here. Did we see Avalanche? Avalanche, right? Arbitrum. So look, all the US brands move the United States dollar coin. So you can get into any of this, right? For the point of growing money. We'll use Stellar, for instance, right? Let's go. This one's not doesn't cost much. So if we come over here to Stellar Lumens, it's actually up 1% on the hour. It's still down in the last 7 days, 15, almost 16%. It's at 22 cents. So we still have the potential. Now remember, this has gone up from 11 cents. I don't know if you all know that, but I'll do a quick show. I remember purchasing stuff that was dirt cheap. Oh my goodness. Not that 20 cents isn't dirt cheap. It's still dirt cheap. Let's see. 15. Let me see. I was getting this around. Oh, here and here. Hold on. My major purchases were at 11 cents. This was down to 11 cents. Where is it at? It was at 11 cents. I bought it at 11 cents. Where is it at? The charts. This should show me I bought it 11 cents. Um, and I didn't buy that early. I bought here. 11 cents. Oh, this is interesting. Why is it not showing me that? This thing was down to 11 cents. It's not showing. What is this? Let me see. Oh, we're still in 2025. Okay, let's come back. Let's get the chart. Yeah, so in 2018 is when I started buying, I believe. Oh, that's how you do it. All right. Well, it might have been 2019. Um, no, it was in 2018. Yeah, so I started buying around these numbers. Yeah, 9, 10 cent, 9, 10 cent. So around here, 9 all the way through 11 cents. So I was doing purchasing here at these prices. Um, you can see here, those prices got really low, right? But did it matter? No, it didn't. Okay, it didn't matter, right? So that is still up good. And you haven't seen anything yet because now you're seeing the onboarding of the United States pushing the USDC. And this is what's going to be used by retailers and the common people. Businesses are going to use it. Whether you know you're using it or not, it's irrelevant. But the businesses are going to be using it. So where are they going to pick this stuff up from, right? In order to get that USDC, you're going to have to use Algorand, Aptos, Arbitrium, Avalanche, Base, CeeLo, Ethereum, Hedera, Linea, Near, Noble, Op, Unichain, Sui, Stellar, Solana, Polygon, Polkadot, or ZeekSync. Either one of them is what you're going to have to use. All of them are going to have to go up in value because more and more businesses and corporations are going to need to get access to that USDC, and they're going to have to get these currencies to purchase said USDC in one of these currencies. And so this moves just like XRP. It's built off the same system. So, like XRP is corporations. This is going to, excuse me, institutions. This is going to be your businesses and corporations. This is going to be big business, right? But not institutions and nations. Institutions and nations, in my opinion, is going to be Ripple's XRP. But this is the same thing, same group of people. Well, it's a break off, a split in different thought processes. And they produce a lot of different things within themselves, right? So you're still going to need to move on something like this to get this. And so fast, cheap. This one, fast, cheap. I'm not sure about Polygon, but a lot of these things are now Hedera, fast, cheap. Algorand, fast, cheap. So you'll have to play around with these and see how fast things move. But to my homeboy who's watching this, we talked about you were going to have a lot of different chains to do these transactions once you start onboarding. This still isn't enough. This is cool, right? It's cool to move that USDC, but this isn't going to be enough when you have every person out there doing transactions. You know, it might take a few years to get people tuned in and doing it because it took years to get people to leave checks, to come over to debit cards, and now to tap. Everything is tapped. Like I just started tapping. Like this is retarded, I know, but I just started tapping, and I just started tapping with the phone. Wow, yes, and not all those devices aren't everywhere. So it's not going to be an overnight to get the people converted into this, but as you can see, they're setting it up and converting to it. So within a few years, this is going to become common, very common, and this isn't going to be enough. You're going to need breakaway networks, right? Like this one has ZBCN, this one has SHX. We'll do the video on SHX, and I'm not sure about these other ones, but I'm basically make videos on the stuff I know, and as I learn more, I'll make videos on that as well. But this isn't going to be enough. So you can get into these things early now, right? And then the things that branch off from this, which are even cheaper, are even earlier. You're going to need more than these to do all these transactions around the clock every day, 24/7. And it's going to be bigger than the United States. Okay. Thelo is something that's used heavily in Africa. Stellar is over in Africa. Their branch offs are over on the continent of Africa. This stuff isn't just in the United States. So when we talk about the whole world, you're going to need break offs. I want you to think about the endless possibility of people walking on this face that are going to have to do digital transactions. That's going to be, let me help you understand this too. You're going to need so many server centers, data centers to record these transactions. You're going to have so many AI bots that are doing stuff in the background to make sure all this stuff works. Okay. AI agents, they call them. You're going to need all that. This isn't enough to make that move around. Africa has the Naira, right, which is their stable coin. All countries, the euro runs on Stellar, right? All these nations are going to be using networks like these, okay? This isn't enough, okay? This is the leader. They told you the United States is going to lead the way. They're going to make the laws for this stuff. They're going to enforce the laws so you can't swindle and cheat people, right? They're paving the way. They want all the tech companies here getting it done, okay? So with them doing all that, this isn't enough. This isn't enough. They're going to lead the way. These are going to have to break off. Excuse me. They're going to have to break off into many different things, okay? Like I said, ZBCN is here. SHX is here. CeeLo is here. There's a few other things. I'm not sure. You have to look these things. I'll be doing my best to look them up. But this isn't enough. This isn't enough. All right, native on the world's top blockchains. You see there, USDC. You can get USDC from Binance, Coinbase, Crypto.com, Kraken, and OKEx. Facts. What is USDC? It's a digital dollar. It combines the power of stability of US dollars with the speed of the internet. You can use USDC just like you would any dollar to buy and trade assets, to send and receive payments, or to save your money. Save your money. Unlike dollars, USDC is a form of cryptocurrency because it's blockchain based. USDC moves at the speed of the internet, near instantly and without the high fees associated with traditional finance. But unlike most forms of crypto, USDC is backed by a highly liquid cash and cash equivalent assets, which is stocks and bonds or US secure bonds, and so on, which is backed by weapons, obviously. We got the guns to back our money, right? Clearly. Um, let's see. USDC is issued by Circle, financial technology company headquartered in the United States. In the United States, Circle is regulated as a money transmitter money transmitter and holds those licenses in all U.S. jurisdictions where required, wherever the U.S. has jurisdiction. In addition, Circle holds virtual currency licenses in New York and Louisiana and is registered as a money services business with FinCEN. Circle also holds relevant international licenses in Singapore, UK, and Bermuda. This is not a game. You don't have to believe anything that's happening or I'm saying or reading. This is not a game. USDC is backed 100% by cash and highly liquid cash equivalent assets. The majority of the USDC reserve is held in Circle's reserve fund, which is the USDXX. This is a SEC registered 2A-7 government money market fund. Government money market fund. Daily independent third-party reporting on the Circle Reserve Fund portfolio is public available via BlackRock. Come on. Come on. Oh my God. Look at that. Black Rock, White Rock, Black Rock, right? White. You couldn't make this stuff up. This is all right. You know what this is? Do you know what this is? This is the top made in America tokens by market cap, right? USA. This is their shit. Okay. This is the US. Oh, well, why is the markets down? Because there's some shit happening. Some shit's changing over. There's change of the guard, change of the system, call it whatever the heck you want to call it. This shit is where it's at. Okay, this is where it's at. Don't miss the bus. This shit is happening whether you want it to or not, whether you believe it or not. This was happening. Users of USDC can use an exchange, peer-to-peer network, or other liquidity providers to convert between USDC and local currencies in over 100 countries. USDC is natively supported on 19 blockchain networks: Algorand, Aptos, Arbitrium, Avalanche, Base, Celo, Ethereum, Hedera, Linea, Near, Noble, Opmainnet, Polkadot, Polygon, POS, Solana, Stellar, Sui, Unichain, and ZK Sync, with more expected. Didn't I tell you? With more expected in the future. Now, why did I say more? Why did they say more? Why I said this isn't enough. This is not enough. This is not enough. Okay. How would you use your brains and start researching deeper? Because this is not enough. What? They're telling you more to come. Why? They know how much money is coming to the crypto network, right? We say, oh, it's a 2.42 market. They know how much money is coming into this market. That ain't jack dibbly dibbly. Oh, but the markets are tanking. Who cares? Blood in the street, go eat. Look, XRP is down to 177. Okay. If you want it in, perfect time. It's down 15.25% last 7 days. Okay. Perfect time to get this, it's 22 cents. Perfect time to get it. You just saw H bars on that list, 13 cents. Perfect time to get it. You saw Sui, you saw Avalanche. Well, Avalanche is still pretty. If you want Avalanche, you can get it at a reduced cost of 15.68. So I think Near was on there, $2.04. So you oh my, the markets are down. Who cares? Who cares? They're not playing with this. This is what's happening. It's not a game. In over 180 supported countries. And that you can see all their documents to prove what they're doing. They're not making it up. They've got all their legal documents. This is why you saw Coinbase and Ripple going through all this stuff, because they got to be tested, tried over to make sure they're proven to be what they say they are, right? How to get USDC on ZK Sync, how to get USDC on Unichain, how to get USDC on Stellar. They give you all, hey, look, this is how you get it done, right? If you don't know how to get it done, they're telling you right here, how to's. You can follow these how to's. They've paved the way. This is not a game. The common person can come in here, click read more, and learn how to do this stuff, right? I give you this too for those who don't know. Blow this up some. Nope, it's already good. What is a stable coin? Right? In a world where cryptocurrencies like Bitcoin and Ether often make headlines for their volatile, stablecoins stand out as the closest thing to real money, fiat currency, that currently exists on the blockchain. Stablecoins are a type of digital currency designed to maintain a stable value while gaining the efficiency, mobility, and the utility of blockchain-based digital assets. You don't make money on these unless you're getting a yield because you're farming it or you're storing it with a company, right? And then they pay you a yield because they're going to loan that money out to people that need loans. That's another story. That's another video. The combination of price stability and on-chain functionality makes stablecoins uniquely suited for various financial applications that require reliability and efficiency, from facilitating fast and affordable global transactions to enabling access to decentralized finance, DeFi. stablecoins are reshaping how value moves across borders and through financial systems. Again, DeFi, right? Decentralized finance. DeFi's bankless future, decentralized finance, right? They're telling you what's coming. They put it on their debt clock. You don't have to guess. They're telling you. You don't need to take my word for it. That's why I've got all the stuff open so you all can see what's happening and make your own decisions. All right, the fundamental goal of stablecoins is, simply put, to achieve the best of both worlds. The reliability and trust associated with fiat currencies combined with the advantages like high speed, low cost, and added security of being a blockchain based asset. In this way, stablecoins act as a bridge between the fast paced, innovative world of cryptocurrency and the trust and stability of traditional financial systems. Stablecoins minimize price volatility by anchoring their value to stable assets such as fiat currencies, commodities, or other financial instruments. Unlike traditional cryptocurrencies, which can experience significant price swings, stablecoins aim to offer the stability and reliability of traditional money while retaining the advantages enabled by blockchain, such as fast, low cost, highly secure transactions. Utilizing blockchain networks also allows stablecoin transactions to bypass banks. Bypass banks. Immense savings from the elimination of the fractional reserve banking system, who take fractional amounts of your money while doing transactions so they can fatten their pockets, right? Without bypassing banks. What's going to do that? USDC. Going to bypass banks, right? Bypass banks. Why? Because this is Made in America tokens. This is the United States token. This is their stable coin. This is the United States, right? They're going to bypass banks and financial intermediaries, which is going to save people in the United States money. It's crazy. Avoiding their associated costs and resulting in faster transaction times compared to just traditional banking systems. Additionally, the 24/7, 365 operational nature of blockchain chains empowers users to transfer funds with tremendous flexibility. 24/7, 365. Somebody calls you 2 o'clock in the morning, need money, boom, get it done. Few seconds, wham, bam, thank you, ma'am, transactions are over. A truly well-designed and high-utility stablecoin is consistently stable in price, available 24/7, 365, and backed one-to-one with transparent and safe reserves. These features make stablecoins a reliable medium of exchange, a store of value, and a unit of account in the digital economy, bridging the gap between traditional finance and cryptocurrency. Stablecoins come in different forms to meet varying needs and preferences within the financial ecosystem. Each type offers unique trade offs in terms of decentralization, stability, and risk. For instance, fiat backed stablecoins are the most widely adopted due to their relative simplicity and transparency, while crypto backed and algorithmic stablecoins, Tether, might appeal to those seeking decentralized alternatives despite their higher complexity and potential risks. Here we'll examine the four main types of stablecoins. So we're all going to get a learning lesson. I'm going to read this and then I'm going to close this video out. Fiat-backed stablecoins are the most widely used and trusted stablecoins. They typically rely on reserves of highly liquid assets such as cash and short-term government securities to ensure their value remains stable. USDC and the euro. For instance, are leading fiat-backed stablecoins that are fully backed by real-world assets and issued by Circle, adhering to strict regulatory and transparency standards, including regular audits and reporting on reserve backing. However, not all fiat-backed stablecoins offer the same level of transparency, regulatory compliance, or reserve backing, which can result in varying levels of trust and adoption. Commodity backed stablecoins offer a way to digitize and transfer ownership of physical assets such as precious metals, gold, silver, oil, real estate, among other commodities. Commodity backed stablecoins allow users to hold and trade tokens that represent tangible assets through blockchain technology, a process often called tokenization, making it easier to invest in and transfer ownership of these assets. For example, Pax Gold is a commodity backed stablecoin that represents ownership of physical gold stored in secure vaults. This approach provides a seamless way to gain exposure to commodities without the complexities of managing the physical assets itself. And they were there to tell you Pax Gold. You get some commodity access without managing the actual commodity, which is the gold. Can you trust it? I don't know. Don't have it. Crypto-backed stablecoins use crypto, but it's still good because if you want to have access to the exposure, right? You don't have the gold or silver, but you're exposed to it. But you don't have the gold or silver. So to me, like, that doesn't interest me. But it could be a good thing. But I don't know. I like to have it myself. Crypto-backed stablecoins use cryptocurrency as collateral to maintain their value. This is crazy. While their value is often anchored to a stable asset like the US dollar, they are backed by cryptocurrencies instead of the asset whose value they try to match, creating a unique dynamic. USDS, formerly DAI, for example, is a widely used crypto-backed stablecoin that's tied to the US dollar, but backed by a diversified pool of cryptocurrencies like Ethereum and USDC on the Sky.money, formerly MakerDAO platform. So it's like you're playing around with stuff that fluctuate in value and some stuff that doesn't. So that's scary as well, right? Crypto-backed stablecoins are often seen to cater to the decentralized finance ecosystem as they often enable users to mint stablecoins on their own without relying on a centralized authority, which can go sideways because you're putting your trust in people who can be corrupt, right? Using the Sky.money platform, for example, users can deposit digital assets such as ETH into smart contracts to generate stablecoins. This decentralized approach offers greater autonomy in the stablecoin minting process and aligns with the principles of DeFi. However, the volatility of the underlying cryptocurrencies introduces higher risk compared to the fiat backed alternatives backed by a military. Honestly, that's what the dollar and the bonds, secured bonds. If you look the terms up, a bond is a contract or a debt. You know, we're bound by this contract for this debt. Secured just means that by force, I'm securing it, like weapons, military, police. It's securing something, usually by force, right? All right. Then you got algorithmic stablecoins, which use algorithms or smart contracts to regulate supply and demand in an attempt to maintain a stable value without relying on external reserves. Typically, these systems involve a two token structure. One token functions as the stable coin, while the other has a variable value determined by market forces. The value of the variable token is directly linked to the stablecoin's value through a mint and burn process that adjusts the supply of the algorithmic stablecoin based on market conditions. When the stablecoin price exceeds its target, e.g., $1, users are incentivized via an arbitrage opportunity to mint or create more stablecoins by burning or destroying the variable token, increasing the supply and bringing the price back down. Conversely, when the stablecoin's price falls below the target, users can burn the stablecoin to receive the variable token, reducing the stablecoin supply and pushing the price back up. This theoretical stability mechanism depends heavily on market participants acting in predictable ways and on the stability of the secondary token. However, the reliance on arbitrage and market confidence makes algorithmic stablecoins particularly vulnerable to systemic risk and sudden market downturns because you're trusting in men, right? Obviously. The collapse of Terra USD, which was major, shows how these vulnerabilities can lead to catastrophic failures causing significant losses for users and undermining the trust in model, which is why nobody uses that. Stable coins are more than just a digital version of fiat currency. They offer distinct advantages by combining and remember, let me say this. Banks aren't dealing with all this other stuff. Banks are right here, right? They're right here. This is where the bank is. And a business is going to be here too. a store, a grocery store, whatever store you want, a car dealer, right? They're going to be right here. They don't want this crazy stuff that can just do whatever. There's too many risks with this. Commodity, it's a risk. Crypto backed stable coins, it's a risk. Algorithmic, well, this commodity isn't really a risk per se. Um, it's it's really not. It's not. It's just the thing is, do you have centralization over someone to contact if something goes awry? And if you don't, it's like, what do you do, right? So this is more or less for the investor who wants long-term financial growth of their finances. So still a business doesn't want to use that. A business is doing business here. So this is why USDC is the number one choice here in the States and as well as in other countries, because it's backed by your country, right? It's backed by their currency and their stocks, bonds, and all of that other stuff. It's their backing. The gold and silver thing, that's cool for investors, but not for a business. That's not what businesses do. All right, but let's continue. It says stablecoins are more than just a digital version of fiat currency. They offer distinct advantages by combining stability of traditional money with the efficiency of blockchain technology. This unique blend makes them a versatile tool for various financial applications, allowing users to transfer value seamlessly across borders and integrate into emerging digital ecosystems. Their stable value makes stablecoins ideal for everyday transactions, going to the store, and savings, going to buy a car, as users can rely on stablecoins to avoid the extreme price swings in traditional cryptocurrencies. This reliability makes stablecoins attractive for managing day to day expenses and longer term financial planning. Businesses want this, okay? Individuals with an internet connection and a digital wallet in more than 180 countries around the world can use stablecoins, fostering financial inclusion by providing access to financial tools and services for the unbanked and underbanked. This ability to reach people across borders without needing a traditional bank account is transforming how individuals participate in the global economy. Don't need the bank. Decentralized finance, a bankless future. This is um, debtclock.org. Okay, this is the United States information. They're going to a bankless future. All right. Don't take my word for it. View it yourself. Stablecoin transactions that leverage blockchain technology are faster and cheaper compared to traditional banking systems, especially for cross border payments, unlike traditional finance systems that may take days and charge high fees. For international transfers, stablecoins enable near instant settlements at a fraction of the cost, making them ideal for remittances and global commerce. Stablecoins are an integral part of the on chain ecosystem, which is made up of smart contracts and decentralized apps. By providing a stable and predictable medium of exchange, stablecoins allow smart contracts to function more effectively in scenarios that require consistent values, such as automated payments, leading protocols, or decentralized marketplaces, opening doors to new financial services. By integrating with blockchain technology, stablecoins allow for programmable money, enabling automated transactions, lending, and more sophisticated financial instruments, which we talked about with here, where you can set the AI to send those payments out, to, for instance, John. So it's programmable, right? And there's no need to go any further. It's going to go over and over saying the same thing, right? Except here, micropayments. Stablecoins make micropayments practical and efficient for content creators, gaming platforms, and online services. So just imagine you're on YouTube and you want to send somebody some USDC, 50 cent, 70 cent, a dollar, $2, whatever. You can just send it to them right there in their on their channel. By reducing transaction fees to near zero, they enable seamless and cost-effective payments for small transactions that would otherwise be uneconomical with traditional payment systems. This is particularly beneficial in industries like digital content, which all people in the United States should be doing some form of digital content. That's just my thoughts. Where users can pay per use or tip creators directly, fostering more flexible and inclusive monetization models. So for those of you YouTube content producers and whatnot to see this video, this is coming to your future. USDC exemplifies the above use cases by enabling users to send, spend, save, and trade with speed and reliability. whether facilitating cross-border payments with minimal fees, supporting retail shoppers with low-cost transactions, or providing a stable store of value for savers, USDC demonstrates the practical benefits of a well-designed stablecoin. Additionally, its role in DeFi highlights its versatility, offering a dependable medium for trading and other use cases in on-chain ecosystems. All right, I'm gonna close it there, just so you all have a better understanding of USDC. Because I don't like leaving you short on stuff. It's what the United States is doing. You don't need to take my word for it. It's what the United States is doing. Been knowing this for a long time. Proof is in the pudding, but it's what they're doing. You guys do what you need to do with this information. Share it with your friends, family, loved ones. Make decisions that'll benefit your family for the future. Get it done. I'll catch you all in the next one.